What's up, millennials? Here we roar. That is the slogan of the company we are going to be analyzing today, which is MoneyLion. And MoneyLion is a digital financial platform that is going to be acquired by the SPAC that's currently trading under the ticker symbol FUSE. Today we're going to be taking a look at the valuation of this company according to the company itself, so not my opinion at all. Also, don't trust me, verify me. I'm just documenting my journey here on YouTube. I'm not a financial expert, so everything I could be saying could be entirely wrong. And also, if you want to have access to the Excel sheet I'm going to be using today, you can join our Discord. It's for free. You can simply go to nesami.com/discord. You leave your name, leave your email address, and then you're going to get access to it. Before we dive into the valuation of MoneyLion, let's first give you a very brief introduction of this company. MoneyLion is trying to rewire the banking system. They primarily focus on Americans, and they use data to develop better products overall. They say that they have a single platform for all people's financial needs. And this company already has revenue, which is actually quite hard to find nowadays with all these SPACs that don't really have revenue for years, but MoneyLion does actually have revenue. The merger is probably going to take place somewhere in Q2, maybe even Q1 this year, but there is just no date just yet. Now we're going to take a look at the pro forma valuation of MoneyLion. And before I start with that, if you encounter any terms that you don't really understand, like pro forma enterprise valuation or revenue multiples or whatever, you can check out my SPAC guide that I released last Friday. So you can actually check that out and refer to that guide if you need a little bit more of a context of what I'm going to do in this video. Okay, so the pro forma valuation of MoneyLion. First of all, we can see that as always, or as almost always, the SPAC started out at trading at a dollar amount of $10 per share. We can also see that pro forma, so after the merger, there are going to be 288.8 million shares outstanding. So if we take that amount of outstanding shares, we multiply that by the price per share, we're going to arrive at this equity value, or this pro forma market cap, if you will, of almost $2.9 billion, okay? Then we can also see that they're going to have $526 million in cash on their balance sheet. So then we can take that equity value, that pro forma market cap of $2.9 billion, we can subtract the amount of net cash, and then we're going to arrive at a so-called enterprise value, which is basically the value of the company. So how much MoneyLion is actually worth based on a price of $10 per share. And that, if you do that calculation, is going to give you $2.362 billion. So the company, MoneyLion, is worth $2.362 billion based on a price per share of $10 per share. But if we go into TradingView, we can see that they're currently trading at a dollar amount of $10.65. So the Excel sheet is going to calculate the correct numbers for you. The pro forma market cap right now is a little bit less than $3.1 billion. And if you again take that amount of cash off, then you're going to arrive at an enterprise value of a little bit more than $2.5 billion. So based on a price per share of $10.65, the company, MoneyLion, right now would be worth a little bit more than $2.5 billion. But you, of course, want to know what the fair price per share is. Well, first of all, for that, we're going to first take a look at the fair enterprise value. How are we going to calculate that? Well, we are going to be taking a look at the revenue of a certain year. In this example, we're going to be taking a look at 2022, the revenue of that year. And we're going to apply a certain multiple to that revenue to arrive at a fair enterprise value. So we need two numbers. We need the revenue of 2022 and we need a fair revenue multiple. First of all, that revenue number of 2022. Of course, these numbers are estimates. We don't know for sure if this is actually going to happen, but we can see that currently in 2019, they had $40 million in adjusted revenue. In 2020, $76 million. In 2020 was actually a little bit more, $102 million. 2021 is going to be more or less 144 million, and then 2022, which is actually the year we are going to be taking a look at, is $258 million. So that's the number you can put over here in your Excel sheet, $258 million. So that is the revenue of 2022, but now we're going to take a look at what a fair multiple would be for this company. Well, here in the investor presentation, we can see a comparison of MoneyLion with other companies out there. Companies like Affirm, Afterpay, Square, Open Lending, Upstart, and Sophie, which of course is also going public with the Chamath SPAC of IPOE. And then we can see that this MoneyLion company is right now trading at a 2022 multiple of 9x. Well, if we take a look at the other companies, we can see that the multiples are rather a little bit higher in general. We can see, for example, that Affirm has 34x, Afterpay 27x, Square 20x, Open Lending 18x, Upstart 17x, and SoFi 13x. And then we can also see, well, if you take a look at the median number, the median multiple of 2022, we can see that that median number is 19x. Okay, so 19x could be an interesting median multiple to work with for MoneyLion as well. And this is where things get a little bit subjective, of course, because I came up with a range of 17 on the low end and 21 on the high end. So a revenue multiple of 17x on the low end and a revenue multiple of 21x on the high end. If you want to use other fair multiples, then you can, of course, change that, and then the fair price in the end is going to change as well, of course, but it's definitely something you can do. Okay, so if we go to my Excel sheet over here, we can see the following, because the Excel sheet is already going to calculate a few things for you. First of all, if we take that low multiple of 17x and we multiply that by the revenue of 2022, you're going to arrive at this number over here, a little bit less than $4.4 billion. If you take the high multiple and multiply that by the revenue of 2022, you're going to arrive at a high enterprise value of $5.4 billion. And then you can also say, well, the midpoint valuation is simply the average between the low and the high multiple. Then we can see that the midpoint average enterprise value is $4.9 billion. So that is the enterprise value, okay? Now we're going to go one step further, which is going to be to go to a market cap. And by the way, with regards to the enterprise value, we're not going to need to discount this back to the present, because we're taking a look at 2022 multiples and we're comparing them with 2022 multiples of other companies as well. So we're not taking a look at 2021 multiples for like Affirm and all those other comparable companies, but we're looking at the same year, so that means that no discounting is needed for this method. It's basically method 2 of the spec guide that I released last Friday. Anyway, so we had these enterprise values, very well. Then we can go to a market cap. How do we do that? Well, earlier in this video, we said that a difference between the market cap and the enterprise value of a company is the amount of net cash they have on their balance sheet. So if we do that, if we take these enterprise valuations, we add back the amount of net cash they're going to have on their balance sheet after the merger, you're going to arrive at these fair market caps. For the low end, that would be 4.9 billion. For the midpoint valuation, 5.4 billion. And for the high valuation, 5.9 billion. And then the last step would be to take those market caps and divide them by the amount of outstanding shares after the merger, which is going to be more or less 288.8 million shares outstanding. So if you do that, if you take those market caps, divide them by the amount of outstanding shares, you're going to arrive at these fair prices per share. So for a low valuation, $17.01. For a midpoint valuation, $18.80, and for a high valuation, $20.58. So a fair midpoint price per share for MoneyLion would be $18.80, which would mean that the stock is currently undervalued. Of course, keep in mind, don't trust me, verify me. I'm just documenting my journey here, so I could be completely wrong. And also take into account, we haven't taken a look at assumptions. We've taken a certain revenue multiple. We've looked at the predicted revenue of 2022. So if you change one of those numbers, the entire calculation is going to change, and your fair price per share is going to change as well. With that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye-bye.